Its strategy is simple: buy and hold Bitcoin, finance it cheaply, and let BTC's growth compound for shareholders. As the asset base grows, MSTR can raise even more capital at low cost. Saylor calls this a capital flywheel. As long as Bitcoin rises faster than the company's financing costs, the extra value accrues directly to shareholders. MSTR is often understood as a leveraged Bitcoin play, since its share price typically moves 2 to 3 times more than BTC itself. But Saylor's ambition is bigger. He wants MicroStrategy to evolve into a Bitcoin finance company, issuing Bitcoin-backed credit products and eventually positioning itself as a kind of Bitcoin bank. To see how Saylor is translating this vision into reality, we need to look at the evolution of MicroStrategy's financing playbook. To finance its Bitcoin purchase, MicroStrategy started with issuing convertible bonds between 2020 and 2024. These were incredibly cheap, with effective yields of just 0.2% to 2.6%. The trade-off: they could convert into equity at preset prices. Investors didn't buy them for yield. They bought them for the chance to ride MSTR's upside alongside Bitcoin. Take the 2025 convertible notes. Fully redeemed in July 2024, they had a conversion price of $39.80 versus a market price of roughly $150 at redemption. It resulted in 16.3 million new shares, about 10% dilution relative to the total outstanding shares. The $650 million raised from the convertible notes was deployed into Bitcoin that appreciated roughly 5 times over the same period. The gain per diluted share far outweighed the dilution. That's the capital flywheel working, creating accretive value for shareholders. Still, convertibles have their drawbacks. They remain debt instruments, meaning they must eventually be repaid, converted, or refinanced. And because Bitcoin is highly volatile, historically seeing peak-to-trough drawdowns of approximately 80%, there's always a risk if a maturity date lands in the middle of a deep bear market. Although all of MSTR's outstanding convertibles are unsecured and carry no margin call risk that would force the company to liquidate its Bitcoin, insolvency risk still exists if Bitcoin enters a prolonged downturn and financing windows close at the same time. This risk is what makes debt a constraint on flexibility and resilience in MSTR's capital structure, so it announced in its latest Q2 earnings that it plans to equitize all its outstanding convertible debts by 2028.